In this video, I want to design a pathway for you that will lead to one of two outcomes. Either you become a trader who earns consistent income for yourself, or you say goodbye to the market with a pocket full of cash and decide to give up on becoming a trader. Let's see how this journey goes. Step 1. Gathering information. In the first step, you will learn about various types of market analysis. These include technical analysis, fundamental analysis, sentimental analysis, or you might choose to learn quantitative analysis. You will explore different aspects of technical analysis, from indicator-based analysis to classical or modern price action, supply and demand, Elliott waves, harmonic analysis, time analysis, volume analysis, everything, and any type of information that exists. You will take a superficial look at all of this so that when you observe the market, you can identify which pieces of information work well for specific markets. So, which market will you analyze using this information? You'll test your knowledge on various markets, ranging from the stock market, Forex, commodity markets like gold, oil, silver, or even orange juice or coffee, anything. You can also look into a stock index like Dow Jones, Nasdaq, or going to European stock market or Chinese stock markets or cryptocurrency markets. Anything. Your goal is to find a market where the information you have seems to fit well. Once you identify such a market, you have found your niche. Next step, deep diving into your market. At this stage, you need to go deep into your chosen market. Identify the critical moment for that market. For example, when does the market volatility peak? Which session costs change? And how much do they vary? What data is important for this market? What news impacts it? Which other markets influence this market? Gather all this data and map out every factor that affects this market. Also note all the information that the market provides to you and document everything carefully. Now that you have this information and have seen how it works on the market, you'll dive deeper into it. For example, if you're working with indicators, you'll learn that indicators at advanced professional level. You'll master it completely, understanding it in every aspect. Or if your focus is classical price action, you will study it truly until you gain it complete expertise. Similarly, if you're working with volume analysis or any kind of analysis, you'll take your understanding of it to the highest possible level. Once you delve deeply into these methods and gain an expertise in your chosen approach, you'll use this detailed knowledge along with the market insight you have gathered to create a personal trading strategy. Your strategy should have the following key qualities. 1. It must be repeatable. 2. It must be profitable. 3. It must have clearly defined parameters such as stop loss level, take profit levels. Evaluate your strategy in terms of its effectiveness across different time frames. Understand what profit delivers and decide on your risk level, how much loss you're willing to tolerate per trade. Document these metrics, including your win rate, and write everything down and move on the next step. The next step is improving your strategy through backtesting. At this stage, you'll take your strategy and apply it to the past market data, analyzing its performance. During this process, you will refine your stop loss and take profits level, ensuring they are optimized for better risk management and profitability. Backtesting allows you to identify the strength and weakness of your strategy and make adjustments to improve its overall effectiveness. Backtesting allows you to refine your strategy step by step, improving its parameters to make it more efficient and adaptable. You will also identify specific days, times, or situations when your strategy doesn't work as expected, helping you adjust and improve further. Are you ready for the live market? No, you're not ready for the live market yet. In this phase, you open a demo account. It could be $5,000, $10,000, or $100,000, it doesn't matter. Let's say you start with a 5,000 demo account. At this stage, you will follow a specific rule similar to those in platform channel requirements. Avoid exceeding 5% daily drawdown. Your overall drawdown shouldn't exceed 12%. Grow your account by 8% first, then reset it to initial balance and aim for 4% growth. At this stage, you need to execute at least 100 trades based on your strategy and keep a journal of every trade. After completing this phase, during the initial stage of information gathering mentioned earlier, you will also fully learn about risk management and trading psychology. Now, let's move on to the test. You will either pass or fail. If you fail, take $50 from one pocket and put it into another, or even $100, $150 or $200, something that stings a bit and also serve as saving for yourself. Any amount can work. I use $50 as an example because you can use $50 to get a small account from any prop firm, like a 5,000 account. Why transfer this money from one pocket to another? Because you're not yet a trader, and your future trader self will need that money. That trader will be able to use it to succeed and make significant profit with it. So, you take $50 from one pocket and put it into the other, then repeat the phase. If you pass, you repeat the same challenge again, but this time there is no limit on the number of trades. Maybe your strategy allows you to meet the goal with just one trade, or maybe it will take 1,000 trades. This time, I'm not setting a trade limit for you. If you fail again, set aside another $50, 100 or 200, whatever amount you choose, and repeat the process. You either remain in the cycle indefinitely, never passing, and essentially end up saving money for yourself over time, or you reach a point where you give up. If you give up, you can live with the money you accumulated and pursue something else. Or if you pass, you'll enter the live market with the $50, 100, or however much you saved during the process. Or you'll use that money to get a prop firm account. At this point, it's up to you. By then, you will have developed the mindset and personality of a trader. Someone who knows how to use their money wisely and can easily generate profits. This is a guaranteed path. Either you become a profitable trader who can make significant money from the market, or you end up filling your pockets with savings. Either way, you win.